So here are 3 stocks that I'm looking to buy after this recent market pullback. First is APLD, Applied Digital. They build and operate AI-focused data centers, basically the infrastructure that powers high-performance computing and AI workloads. They've locked in massive long-term leases with CoreWeave and a major US hyperscaler, giving them around $11 billion in contracted revenue over the next 15 years. It's still a relatively small company compared to the demand it's positioned for, and the revenue is already growing really fast off these AI deals. So if they execute, there's a lot of upside tied directly to the AI infrastructure build-out. Full disclosure, I do have a position in APLD at around $9, but I'm so excited to see where the next few years of growth will take this stock. Next is SMCI, Supermicro Computer. They design and build AI servers for AI data centers, and they are one of the key hardware partners for NVIDIA, as well as working with AMD and Intel on next-gen GPU systems. They're guiding for huge revenue growth and AI server demand ramps, potentially up to around 26 to 30 billion in sales for the fiscal year 2025, which would be 70 to 100% growth year over year. And despite that, the stock still trades at a discounted forward PE versus all its peers, actually really low, which makes it interesting to me as a high growth AI infrastructure play that isn't priced like some of the more hyped up names. Now, there is some concerns with the leadership and accounting, but we're really gonna have to see how this next year plays out, but I would highly look into the stock. Full disclosure, I do own about 100 shares around $30, and I'm really looking forward to see how this next year plays out. The third is Meta. They own Facebook, Instagram, and WhatsApp, and they sit at the center of global digital advertising. Their large-scale AI investments are already improving targeting and recommendations, and they're spending heavily on AI infrastructure that should keep driving revenue and margin for the next few years. And right now, Meta trades at a forward PE in the low mid-20s, which is reasonable given its size, profitability, and expected double-digit EPS growth. And it's cheaper than many other big names when you look at growth versus valuation. So for me, it's a way to get exposure to AI and a dominant ad business at a valuation that still makes sense. And I do own Meta stock at around $2.59 a share. I've been holding this for years, and I plan to continue holding for many more. I'm not saying these are all perfect valuations right now, but they are definitely strong positions in an AI and digital infrastructure world where they have real growth ahead and better entry points than we had a few months ago. So this is not financial advice. You do your own research. This is just what I'm doing and how I'm handling my own portfolio. I hope this helps. Peace.